Markets have finally started to sell off. However, as I'm sure you've seen, today's daily closes don't look all that compelling for continuation lower. Or do they? The market profile actually gives us a little hint, a subtle hint, that some of these hammers might be deceiving. There's a lot of chart maintenance to be done, but lucky for you, I've got it covered. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 6 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off with a closer look at the SPY daily time frame chart here, and the first thing we always evaluate is what's going on with the trend. Well, the highest high and the all-time high is here, and that is where the pullback has started from, and we know that there's an opportunity for a higher low really anywhere above this previous pivot low from back down here. Remember that from here to here, we really just had an equal low, and there's been no hourly pullback that actually flipped the hourly trend to down until this breakdown started this week. So is it possible that from here to here, we have a daily higher low in the trend count? The answer to me is absolutely yes. Now, I'll concede the point that the best higher low would have been on Tuesday, pulling back towards this level here at 638.15, and then bouncing from that point, using the previous all-time high as newfound support would have been more bullish. However, as we noted in the intro, we do have a hammer candle structure here where sellers did fail towards the lows of today's range to really find price acceptance towards this 634.50 spot. And you could also see that the sellers were unable to close price underneath the daily 20 SMA, and price closed quite literally on that key higher low spot at 638.15. So although we overshot 638.15, is it possible that this is still a higher low? And if we find acceptance on the daily timescale over 638.15 going forward to end the week, is it possible that that higher low maintains itself and the uptrend remains obviously an uptrend? I think the answer is yes. And over time, of course, what we'll try to navigate towards is the all-time high. Now, there are some intermarket dynamics that pose a little bit of a threat to this narrative, but the main thing is that the S&P seems stronger right now and the NASDAQ seems weaker. And you can see this well illustrated, and we'll get to the sectors, of course, but through the rotation that's taking place. If you look at today's session, there's only a handful of sectors that were red and a handful of sectors that are still green. It was the same story on the Tuesday breakdown as well. I can't undo this or unwind it, rewind it to show you what Tuesday looked like, but there was a mixed bag of sectors. So sector rotation is taking place as this pullback is taking place, which is typically more bullish for markets as opposed to outright bearish. Now, of course, the threat will become, and it's probably worth doing this as well. Let's go ahead and just do this together. A little bit of chart maintenance doing in the video here in real time to be done. We have 642.75. This is a 4-day balance range overhead, and should the market rally and find a lower high underneath that, I'll have to concede the point that on the daily timescale, it's very possible that a lower high is developing. But the base case for now, again, barring some sort of black swan event, the base case is that this is a mild pullback from the highest high of the trend count, which is the all-time high, and it's possible that over the hammer high gets us at least to the retest of the bottom of the breakdown range, and then from there, if we get continuation through 642.75, the all-time high becomes the target. So on the daily chart, I would not look at this, especially noting the rotation that we're seeing here in the sectors, as an end-all be-all breakdown. We'll talk about the market profile and the value area shift in just a moment, but let's take it down to the hourly chart here and just see what's going on. If you're a stronger seller, what do you ideally want to see? You're probably not looking for a 100% retracement intraday of the sell-side action that we saw today on the Wednesday session. Now, we should also bring up, okay, we did see a 100% retracement of today's action, but Tuesday's breakdown is still very much so in force, to which I would agree. That is absolutely true. If we take out a Fibonacci from the all-time high to this pullback low, you can see that we've landed as of today's close right back at the Fib 38.2. So from this perspective here, sellers are ideally battling for some kind of price acceptance underneath 638.15, which is that key daily level we were just talking about based on the previous highs from back over here and the opening print really of the rally session from CPI of last week. So those key areas here on the chart will really determine what happens tomorrow for the market, in my opinion. Now, there's a very subtle nuance here that we need to pick up on, and it's the fact that the hourly trend has already flipped back to up. I know that's crazy to think about, but you have a major hourly low here. Intraday, we actually set a higher low relative to the low of day, we also set a pivot high, and then we broke over that high into the close. So all things considered, is this a possible hourly double bottom where we've already broken the neckline? I think the answer is yes for the time being. It depends on where we open tomorrow. If we open over the neckline at 637.50, so somewhere in here, I would give buyers the benefit of the doubt, and the trade becomes a possible long over today's high, Wednesday's high, for some kind of Brigade bolt here as a counter trend measure on the daily through this thin structure. The reason that's an attractive trade is because of the thin structure. What goes straight up, came straight down, likely can go straight back up. There's not a whole lot of resistance. There's quite literally no hourly level in here. If you're over 639.85, the target becomes the bottom end of the range here that we've broken down from at 642.75. Now, once again, as we mentioned on the daily, should we get this situation to play out, something that looks like this, when and if we get here, please reevaluate. If the market does flip the hourly trend back to down again, I would be concerned about a daily lower high. That would be a lower high since this would constitute a hourly uptrend, right? Higher low here. This, of course, is a high, higher high to get there. So you'll have an hourly uptrend to get there. If the hourly trend flips back to down underneath 642.75, this is a daily lower high. And now suddenly, right, you're starting to deal with a double top. And then, of course, the neckline break underneath 634.50 becomes much more of an issue. Now, what I've just outlined here is extremely speculative. Is this going to take place in the next 2 trading sessions, Thursday and Friday? I personally don't think so, but it's a situation that I would prepare for should we get this rally into the near-term future. If the market opens tomorrow underneath 637.50 in here, I would maintain a little bit more of a neutral stance, not wanting to be overly aggressive inside of today's range, and really what we'll see is the point of control. The midpoint of today's range is the point of control. It's the fairest price to do business. If the market accepts in here, I would think that we start to balance off, and the next trade will really set up as some kind of bear flag, potentially, as we just saw, via the Fib 38.2, and a possible breakdown and failure here to continue the pullback. That's something that will take place over time, I would imagine, and not immediately tomorrow, right? The catalyst could be, as we know, on Friday, Jackson Hole, Jerome Powell speaks at 10 o'clock a.m. Eastern time. So we'll watch out for that as a possible catalyst. But given the response from the FOMC meeting minutes release today, doesn't seem like the market's overly concerned about a split Fed right now, which is kind of interesting because it's been fairly unanimous over the last couple of, what would you say, years, really. There's very few meetings where there is some ununanimous decision to keep rates the same, hike them, lower them, whatever. So that's the take here on the S&P. I would be very neutral if we're at the daily 20. If we're just chopping around in here, I would not want to participate. I'll show you the market profile in a second. I do think the counter trend rally becomes compelling for something along these lines. I think anyone who got overly aggressive on the short side, started initiating new shorts towards these lows, how do they feel? Put yourself in their shoes. Not great, right? So any sort of squeeze over today's high likely takes back this thin structure, in my opinion, where the shorts kind of get blown out here. Let's take a look at the intraday anchored VWAPs, and then we'll take a look at market internals. I want to show you some supporting evidence that would align with this thesis, right? If you're inside the midpoint of the previous day's range, not only is it the 20 SMA, but you're pinching in between the breakdown VWAP as well as this is the low from the labor report back here, that VWAP, you're pinching in between those two. So the next compelling short really comes from consolidation here, as we've said, build it out as a bear flag, and then we go lower from there, right? That's one potential scenario. If we squeeze up and over this VWAP, again, put yourself in the shoes of any participant who's short from the time of the breakdown on Tuesday. Now, obviously, some shorts are positioned from up here, whatever, but the anchored VWAP tells us the average weighted price by volume. So if we take that out, and if we're over today's high, 639.85, on average, those sellers are feeling like this, and those buyers are feeling like this. Anybody who, quote, bought the dip is actually going to be made whole. If we're over that, I shouldn't say anybody, but on average, the anchored VWAP, the average volume weighted average price, right? So that is what we're dealing with on the spiders there. Let's take a fib from the low up to the high as well. And what we'll note here is that there's a little overshoot of the fib 38.2, but again, no reason to, in the S&P in particular, it's different in the NASDAQ, but in the S&P in particular, there's no reason to call this anything more than just like bull flag near the previous all-time highs. Obviously, there's some overshoot. There's some overshoot at the 38.2, but where did we close? Over the 38.2, right? So all things considered, I don't think it's a little premature to become overly bearish in the S&P 500, in my opinion, especially, I'll point this out again, based on sector rotation. Now, why does the sector rotation matter? Well, because if you take a look at the market internals, first of all, if you're not familiar with the market internals, check out the video tutorial in the top right-hand corner. But as the market has sold off aggressively, let's just focus on Tuesday and today's Wednesday session, at least early, right? Tuesday, Wednesday. What's going on with the volume flows as this sell-off is taking place? Are they aggressively lower? I mean, come on, the answer has to be no. We never even came close at all this week to negative 300 million. The net volume flows on the week are, flat, for lack of a better term. I think if I hide this, yeah, there's the histogram. Did we ever have at any point during the session this week a -3 on the ratio here? The answer is absolutely not. It was more of a mixed bag today, negative ones and then positive ones into the close. So stronger sellers are not really stepping up at the exchange level, and we'll see this in market breadth as well when we get through supporting evidence. You could see it here in the advanced decline line as well on Tuesday when the market's selling off aggressively. And mind you, on the Monday session, it was a completely balanced range. Remember that this measures from previous day's close. So hypothetically, as soon as we got underneath Monday's low, there should be more things underneath the previous day's settlement than not. And yet, what did the advanced decline line do? It stayed over the zero line all day on Tuesday. And on today's session, really flat towards the zero line. Of course, intraday, when the heavyweight components are moving lower, of course, your index score, which is what matters for the intraday activity, is going to print red. But at the exchange level, not everything was selling off. So once again, that sector rotation, that, the idea that tech is really what's pulling back hard here and not much else, actually consumer staples are breaking out today. That's the compelling argument for the S&P side of the house, at least, to not be this big bearish short. If you look at the tick here for the NYSE, very, very flat across the cumulative builds on the tick. So once again, I think it's, intraday, are there great shorting opportunities in here? Absolutely. But do I think this is going to be a sustained 20% drawdown in the S&P? Is this the start of that? Based on the evidence we just walked through, I don't think the answer is yes. I think it's actually more like no, and this is probably a dip that should be bought. As a matter of fact, with the group, we've started adding small chunks of available cash for the month of August as this pullback has taken place, right? So let's continue along to the market profile. I'll just show you this really quickly. So in the intro, when I said there's maybe a little bit of a deceiving look, all I would point out is that the value area was very centered in today's individual range. And by the way, if you're not familiar with market profile, check out the video tutorial in the top right-hand corner. It tells you what you need to know here. But for those who know, right, value being centered just tells us that we're probably a little bit more neutral. Right? It's probably not as bullish as that hammer would imply, where, oh my goodness, the market needs to rally and just do this big counter trend. I still think there's more evidence that supports bulls being here in the ES versus the NQ, but value is technically down, right? It's clean to the downside. There's no overlap. Point of control is clearly down. It's literally at half back for today's session. So I think automatically assuming, once again, making that assumption is the dangerous part, that it needs to be higher. I think there's more evidence that supports probabilities slightly leaning higher, but this is one that would neutralize some of those data points, right? So what's the takeaway here? Well, unless you're actually over previous day's high, I would not build a compelling argument for if we're just consolidating here, I mean, maybe you're overvalued. Maybe that's a small bullish takeaway. But any drift back down into the midpoint of the range, as I said on the S&P hourly chart, I really don't want to be involved there. I mean, if you take a look at today's distribution, it's a normal curve, right? Fairest price to do business in the midpoint of the range, you really don't have much of an edge there. Your edge is going to exist when sellers from in here are like, oh crap, we're off sides and we need to close out when we get over prior day's high. Or when buyers are like, oh no, we're the ones off sides and we're actually consolidating here underneath value area low. So because the close was up here, I think buyers have the benefit of the doubt coming into the Thursday session. Today's Wednesday. But for the most part, if we fade to the midpoint of the range, don't be surprised if the market just chops around and doesn't do much if we fade to the midpoint of the range. That's the takeaway here from the market profile, all right? We have great excess on the lows and the highs. This did repair the poor low from the Tuesday session. There's really not many other nuances to glean from, profile here. Let's get that back on the screen. The only other thing that you might be able to say here, if I zoom out on this, can we see it? It's even further down. Let's keep going another day to the left. There we go. Down here is the next VPOC, right? So the virgin point of control that's up next. Should the market continue to break down, you're really looking for this target way down below. I'm not calling for this tomorrow, this week, nothing of the sorts, but just pointing out the next market profile reference, VPOC, virgin point of control, 62.64 for those who are interested in that as a reference. All right, so that is the ES side of the house. That is the market profile. Let's jump back on over to the platform here. Let's reset this over to our QQQ daily, which is where things start to get a little different. Now, I think the best illustration perhaps is just using the previous all-time high. Remember that in the S&P 500, we've basically closed a hammer right here, right? Obviously in the NASDAQ, it's not even close to that previous all-time high. So the concern here becomes that there's this attempt to break the blue sky territories, and the failure has been much more severe. So sellers are stepping up, and I wouldn't say trapping directly. I would never think of like, oh, the sellers are out with this nasty, deceiving plan to trap all these buyers at the highs. It's not really how it works. But buyers who did initiate up here might feel trapped, right? And the sellers have the edge now for what I would argue is a much more compelling case for a possible trend reversal, right? There's much more of a clean opportunity for that lower high here up against the prior all-time high versus the ES, which has the multi-day balance range overhead, right? It will still maintain an uptrend in the ES if that's the case. Now, you still have this longer lower wick, which would just tell us that sellers didn't really achieve the ideal close on the lows, but notice that we're underneath the daily 20. We're underneath this high. We also overshot this by a substantial margin. The best thing would have been kind of a higher low that looked like that if we were going to still maintain the stance that 566 was the line in the sand, which, again, we've clearly overshot. So the trend is still technically up. The pullback is still technically coming from the highest high in the trend count, and this could technically act as a higher low, but I would certainly want you to be aware that the NASDAQ side of the market could, of course, yield that lower high in a more substantial way. That's 575.20 on the daily timescale. So as we drill down perhaps to the hourly charts here, get a little bit more granular, it's going to be a lot of similar concepts to the ES, where on the hourly, you've already reversed the trend via low and then higher low happening here. Not as clean of a break of the neckline. You kind of just closed right at it on the NASDAQ side versus the ES. S&P is a little bit higher. You'll also note the close right at 566, which makes our job a little bit more difficult. So in the NASDAQ, I would really use 566 as the line in the sand. If we're above 566, like the ES, like the S&P, there's really not much structure here. There's no hourly level through that straight down move. Now, mind your daily 20 SMA. Maybe mind the low from here, which was your CPI rally low, right? That's CPI's volatility. Then we rally. So mind that spot. But it's technically been invalidated by the hourly closes through 571.70. The next real level is just up here at 575.20, which is that lower high threat we were just talking about on the daily. So how do I trade this tomorrow? Probably looking for similar, probably using yesterday's opening print / high of day. Consolidation here over 566. Brigade bolts get here and then here. Reevaluate for the possibility of this. Again, speculative in nature right now, but we'll see. That would start to develop the head and shoulders look we were just talking about. If we get there and we pull back and do this, though, notice this higher low coming in. So we pull back off the level, but then higher low here. The hourly trend will remain up, right? Hypothetically, we'll have to see what this price action looks like. But if that higher low exists, then an equal high reattempt should likely yield this. And I would really look to the SMH. Where's the SMH? Down here. I'd look to semiconductors to say, okay, has there actually been a substantial recovery in semis, which have been a key component of driving this market higher in the first place? Another thing that you could use to gauge this is the S&P. I know it usually happens in the opposite way because the S&P really follows more along the lines of like, okay, it's 30% tech. The QQQ leads it around like a dog on a leash. But in the inverse sense, if the S&P rebounds and the sectors remain strong and positive, and then some of those defensive sectors start to rotate cash flow out and back into things like the SMH, into the XLK, then this situation suddenly becomes a lot more compelling for upside. So as long as, here's the bottom line, as long as the S&P marketplace remains rotational, this would technically offer a long opportunity to get back to the all-time high as long as there's available cash to move back into things like the tech and semiconductor sectors. And possibly, what's the big catalyst upcoming for all of this? It's none other than NVIDIA earnings next week, right? So it's something to have on your radar as a potential catalyst for that to, I guess, literally catalyze the move. That's the definition of the word. So what else can we say here? There's possibly a short on the NQ, or the NASDAQ here, underneath 563. So if we open in range here, underneath 566, midpoint, I'd be a little bit more compelled to take the NASDAQ short underneath 563 for something that looks like this. Equal low retest, right? Risk, reward, something along those lines for tomorrow's session. That would be one possible idea. I don't think I would overstay my welcome on the short side as we approach the daily 50 and also being extended for almost a 2 sigma move underneath the lower edge of the weekly expected move, 1 and then 2. Technically, they get a little bit smaller as you go on as the distribution curve, right? You get here, and then smaller, right? So anyways, you get the point. I would not overstay my welcome on the short side, approaching the daily 50 on the QQQ NASDAQ. Let's check in on some of these reference points, such as the intraday anchored VWAPs. You can see that this is the same thing from the Tuesday breakdown. Notice that we are not over the jobs report, labor report, anchored VWAP low. That is confluence with the daily 20. So be cautious of this long into the daily 20 and the anchored VWAP there. If we do move higher for the full test here, then a possible entry for that would be, okay, you test this, you come here and here, that would probably align with over time, depending on how that plays out. Something along these lines, right? That lower high there could be the entry short to then retarget 566. Right, so a couple of situations to prepare for, a couple of outcomes that I'm looking for, and generally speaking, I think the tone is sellers failed, right? Sellers failed via this hourly, very, very prompt hourly reversal and trend right back to the upside via the intraday higher low. That to me is the main takeaway. So as long as we're over 566, buyers technically will have a little bit of edge tomorrow. Okay, that's the NASDAQ. Let's jump into the NASDAQ internals, see what the story is over here. Sorry, wrong click. Let's jump into this. You can see that was much more severe on that Tuesday session, which makes more sense, right? If you're paying attention on Tuesday, you know exactly what drove the breakdown. We're talking NVIDIA, basically anything tech related. Big old breakdown. Palantir was the biggest offender there, down about 8% on Tuesday. So this not a surprise to see some relative weakness on the NASDAQ side, but how did it get followed up? I think that's the next question I would ask is, okay, well, we didn't see, again, negative 400 million, so we're not over-correlated. Advanced decline line made it closer to the zero line to close. The cumulative tick was pretty flat, and actually this intraday build was in the upward direction. So all things considered, did we come into a little bit of a capitulation low here? It seems somewhat the case that could be reasonable. There's been no headline. I wouldn't say that this is like an emotional headline-driven breakdown. It's been fairly organic price action, I would think. That's driven it so far, but as you can see, the internals diverging back to the upside here on this move does make a little bit more sense that this could be a temporary low for now. Let's get on over to the market profile for the NQ side of the house, and then we will finish up with the Rusty Russell, get into all of our lovely supporting evidence charts. Same concepts as the ES here. You can see here's your value, here is your value. Clearly breakaway to the downside, point of control, also breakaway to the downside. Notice your point of control is ever so slightly underneath the halfback level on the NQ market profile. Another thing I would just zoom in here quickly for is to just point out that we don't have a single print deficiency in that B period during the morning breakdown. The D period retracement back to the upside leaves that quote repaired, right? We don't have singles there anymore. There's 2 TPOs of overlap, so that's all set. Same takeaways in terms of the normal curve in here, and any consolidation in the midpoint is kind of neutral until we break that higher low and do something that looks like that, right? That would start to get us underneath the point of control, moving likely towards prior day's low as a target. Let's jump back on over to the platform here. Let's take a look at our Rusty Rut. Let's just reset this to our daily. There we go. Russell, why else might we think that the S&P 500 could be okay, so to speak, in its current position? Well, if we look at the Russell, take a look at the balance range and how we held a hammer right near the high, 225.50. If this hammer, which it closed already, but if the hammer can get acceptance over its high, then is this not just a higher low in the sequence? That would also be a look into the range, prompt failure. Sellers not really doing their job. Sellers ideally look for this, right? So we'll see. This is really a question to answer tomorrow. Tomorrow, if we get a lower high in range, 225.50, you know, okay, it's a headwind for the S&P. If we crack the hammer high tomorrow morning and we're getting consolidation here, probably a bullish boon, a tailwind for the S&P to continue its higher low ascent as well, right? So really watch your IWM at 225.50. If it could stay over that and then break over 226.35s, I think you have a rotation. If you take a look at the hourly chart, hourly is a very clean balance range here based on Thursday, Friday of last week. You have look below and fail, right? What should the target be? The top end of the range, 228.65. Once again, a tailwind for the S&P 500. So it hasn't quite done it yet. Maybe if this is double bottom, first step is consolidation here. Step 2 is in the range over 226.35. If we're getting consolidation here, then we have to give the bears the benefit of the doubt first, so long as price opens under 225.50. That's TBD, right? 225.50 will be a big level, a big arbiter of price for tomorrow's session. So that is your small caps. I would keep it simple. It's all about how this really resolves here as the top of the previous range. Do bears keep it in range? Bear flag breakdown. Oh my God, that's ugly. Then structure retracement, right? The whole 9 yards. Or do the bulls get it back up and over? In which case, we're bullish the S&P. So using this as a big guide for the S&P 500 side of the market, let's jump into our Russell internals. You can see very similar to the S&P rather than the NASDAQ, much more rotational here in terms of volume flows, advanced decline line, much more rotational, cumulative builds, very rotational. So nothing to really read into in terms of major sell side pressure on the IWM or just the Russell side of the market. If we take a look at the RTY market profile, you'll see very similar to everything else, a little bit more of a spike on, not spike, but single print highs, decent excess on the lows. Value is still technically down from prior day, as is the point of control. So all the same concepts apply here in the Russell, I would say, as we covered already in the S&P 500, with just the caveat that over the high of day here is going to become more of a helpful data point for S&P Marketplace. I've said that probably too many times, and you're like, just move along, so we will. Let's take a look over here. Let's go back to our daily set. And let's look at our sector posture. I know we already touched on it a little bit, but there's been a great rotation taking place here. The XLP is the leader on the week, up 1.41%, followed by real estate, financials, energy. At the bottom end of the barrel, it's the tech sector, it's semiconductors, it's communications, all underperforming the S&P 500, down in the neighborhood of about 2%. If we take a look at these structural charts, let's just rip through them real quick. You can see staples breaking out. So let me ask and pose the question, is the S&P 500 going to crash and burn and go to zero? If one of the sectors looks like this, I think the answer is absolutely not. So again, trying to maintain a little bit more of an optimistic stance in the S&P for a daily higher low. And also, for what it's worth, I know we don't oftentimes look at weekly charts in the midweek review because the candle's not closed yet, but I mean, just play the hypothetical here and pretend this isn't even a weekly chart. Pretend this is a 5-minute chart and you're trading intraday. Does this look helpful for the long case or does it look helpful for the bear case? Are you shorting this chart or are you buying the break of the hammer high seeking continuation, right? What does this chart look like if you're trading a 5-minute trend? Probably bullish. So why, this is all fractal in trading. The weekly chart is like not doing anything so detrimental where, oh my God, the market's going to crash and burn and go to zero. Like we had 2 days of sell side pressure pulling back from the all-time high in a rotational market. Could the market be a little exhausted up here on the tech side? Absolutely. And there are concerns in the NASDAQ, but again, just maybe resetting and going back to the XLP chart, and the whole reason we're talking about this, you're not going to have a market crash if you have staples looking like this, right? If staples were here and threatening this downside, whoa, red flag, red alert, but it's just not the situation we're dealing with. If we look at real estate, again, it's not even breaking the lows of the range here. If we look at financials, looks pretty good in this balance range. It's a building block in the upward direction. Bob the Builder is going to come to save us. Energy, not much to talk about here, sideways in the range. If it cracks the lows, maybe it's a red flag. It's a lighter weight sector, though. Not really concerned with that. Healthcare, top end of the range. This is one where I might exercise a little bit of caution. This has been a range trade for months now. So at this point, I would start thinking about sell side on the XLV. And honestly, I know the UNH crowd is like, oh no, Buffett bought it. It's got to go to $1 million a share. I mean, the trade is over, right? Unless you were long from the character change down here. Literally talked about that in the weekend video from whatever it was, 2 weeks ago. Unless you were long from the double bottom neckline break, I would not be longing this inside of this crappy range. I would really be waiting for the potential for the gap close overhead. That's the next structural or relevant trade. The news is now priced in. It's buy the rumor, sell the news. If you're buying this on the gap up day from the catalyst, I mean, good luck to you. If you take a look at the XLV, again, what's the more reasonable thing to happen at the top of the range? Some kind of pullback. Oh, what's the daily structure look like? Inverted hammer? Oh, sellers are already stepping up towards the highs? I get it, right? So some kind of pullback here in healthcare makes a little bit more sense to me as opposed to straight up continuation. Industrials, not really breaking down aggressively, just hanging in there sideways. I would only be concerned if this breaks underneath 148.25. Utilities, another one that's kind of like a no comment, just kind of sideways. It's not really hurting or helping the S&P right now. Bond market, we'll check in on this real quick. It's in the midpoint of the range. Wouldn't really call it a flight to safety. It's not like we're doing this. So let's move along to materials. Speaking of Bob the Builder, looks fine over 89. If we look at XHB for home builders, nice breakout of this level. Mild pullback can easily offer a higher low here. I mean, Toll Brothers, ticker TOL, reported this morning, and I mean, the chart looks mildly similar, but still an opportunity for that higher low. Cyclical side of the economy seems okay. Like there's room to pull back and then set that higher low. It's okay, right? It's not going to crash and burn. If we look at the XLK, different concerns, and obviously this would echo the same sentiment that we talked about in the QQQ already. Hammer off the 50. If this can reject underneath 262.85, I would be concerned, right? You have left head, right shoulder. Let's not kid ourselves. It's still 30% of the S&P 500, so it's not going to be, it's not smooth sailing. Oh my God, new blue sky territories and continuation if the XLK is rejecting something like 262.85. But for now, I mean, you just kind of have like this equal low thing going on here. I'd be a little bit more concerned. Should we take out these lows, do something in here? That's a more major trend reversal. I think there's an opportunity for trend neutralization to go on here. Like even if we do make the equal high and we pull back, right? You neutralize into a balance for a little while until the next major catalyst, some AI breakthrough, some NVIDIA earnings thing, some, who knows what the next catalyst is, right? But that's kind of my take on the XLK. Not overly bearish yet, but definitely the caution lights are going off. Have to acknowledge that here in the heaviest weight sector. The caution light's on. Lower high would be concerning. If we get over 262.85 tomorrow, I think it's not smooth sailing into the end of the week, but if you just go to the hourly chart here, just like the QQQ, you do kind of have this thin structure retracement towards what was the hourly head and shoulders neckline in here. Okay, so that is your XLK. Semiconductors, SMH. What do we see on semis? Much more of that equal low look. Very similar in terms of a threat for the head and shoulders, but it's a head and shoulders when it is a head and shoulders, right? Just like we always say on the S&P weeklies when everybody's like, oh, it's a double top. It's a double top when it's a double top. It's a head and shoulders when it's a head and shoulders. Excuse me. Which is when... might have to take a sip of water, which is very rare as we're recording, but I have to do it. Thank you for bearing with me. Under the neckline, all of that just to say that, right? It's a head and shoulders when it's a head and shoulders, which would be under the neckline. The previous all-time high, if you look way off to the left, wow, way off to the left. There it is, your prior all-time high. If you break that level, right, that is where things become much more concerning. I would say that is a major red flag. That's a white flag, but it would be red for the SMH. If we are under 283.20, we're not there yet. As of right now, this lower wick supporting the daily 50 keeps it in range. I have to maintain neutral. Okay, jump along to the communication sector, see what's going on here. It looks great. Nice break out of this level. Thin structure retracement. Buyers already stepping up over the daily 20. Brigade bolt here. Next step, probably something intraday over 110.50. That would be new blue sky territories if it goes for it. Next and last but not least, XLY. What's going on with discretionary? Any concerns here? Again, like how can I cannot be an aggressive bear in the S&P if the sectors kind of look like this. I mean, we've seen some downside volatility. It's good to trade intraday, but I can't change my tone to like, wow, I think the market's going to crash if the sectors look like this. I mean, higher low over the previous high. There's nothing saying it's going to hold. I mean, look at the weaker close on discretionary per se relative to the hammer that we just saw on the XLK. It looks a little bit more susceptible to a possible, break underneath that 227. But for now, if we're above, if tomorrow opens here and we're just kind of like noodling around in this balance range, I can't take a bearish approach to the S&P. If we do this, then that changes the story. But for now, can't do it. All right, so let's take a look at some ratio charts and see if this is supporting or conflicting with the analysis thus far. If you're not familiar with how to set up ratios in Thinkorswim, check out the video tutorial in the top right-hand corner. I would say that this is a small white flag. We'll put a literal small white flag on this one here. This is tech related to, or tech ratioed to, the S&P 500. It's been the glue holding the market together for this entire advance here. It's finally cracking the 50 SMA. But look at the financials. Relative performance perking up a little bit. I'm not going to say it's perfect. It's still underneath a downward sloping 50 SMA. This is looking not bad out of communications over the neckline on the pullback here. Looks okay as long as it can persist. We saw the structural chart looks okay. XLY looks okay here as long as it's over this level. I'd say it's trying to build out a higher low. Something along these lines. There you go. And if we look at these three, which really represent more of the risk-off faction of the market, so to speak, healthcare, staples, and utilities, I mean, they've perked up a little bit, but they're still under a downward sloping 50, downward sloping 50. The only one that's more concerning is utilities here, which is slightly perking up, but nothing that's so substantial where I sit back in my chair and I think, I'm going to short the market with both hands because utilities are mildly outperforming over the daily 50. No, wrong. That's not really the appropriate mindset here. And again, you could see a similar illustration in the risk on off AB sets. This is neutralizing. It's no longer really a pure play uptrend. Same thing here. You could see all of these trends are neutralizing just a little bit. But the question I would just ask is, are they in downtrends? Should we be aggressively seeking downside if they're still, kind of neutral at the highs? No, a further downtrend or deterioration in the risk appetite of the market may be around the corner, but we just haven't seen it yet. So there's no need to front run that, especially when we know that the weekly trend and the daily trend of the S&P still remains in the upward direction. Let's check in on the B set, and you can see a small uptick out of the gold ratio, but still underneath a downward sloping 50. Same thing in the TLT long bond. And if we just go full screen on Bitcoin, because this one's been a fun one to watch recently, take a look at the daily chart, we've sold off aggressively. I have to admit, I'm slightly concerned about the failure at the new all-time high to come all the way back down to the equal low. But as long as we're over this 112.275, I can't say that it's been a failure of this breakout here yet, right? If this turns into a double top, like we were just saying, it's a double top when it's a double top. That requires a break of the neckline, and we just haven't done it yet. So Bitcoin concerning, but not actionable on the short side quite yet for a full-blown trend reversal. Let's jump into the dollar and rates. There's really no comment here. It's been a non-issue for markets recently. Rates have remained really more range-bound than anything else. We'll see if Jackson Hole commentary changes that fact. If we look at the short-term inverted ZT, subtle uptick here, but generally still lower, indicating probably something, if I had to guess, if I was a betting man, I looked this morning, but I'm going to go with 85% odds for a rate cut in the month of September. Let's see if the odds have changed over the span of the day. Oh, would you look at that? He's a pretty good betting man. 85.1% odds for that cut, and then 14.9 over here. This will likely change on Jerome Powell's commentary come Friday, but for now, still indicating a cut as a higher probability outcome. That would be 1 and 2 cuts to finish out the year, which does align technically with the Fed's SEP. We'll get a new SEP in September. And keep in mind also, this is going to be a big deal at Jackson Hole because the market's pricing in 85% odds of a cut, whereas Jerome Powell in the last FOMC was like, you might be lucky if you get 1 cut this year. Right? So there's kind of some tension here where the Fed is normally very transparent about when they're going to do what. They serve it up on a silver platter so nobody in the market is overly shocked, and that way, there's not too much volatility. You could say that's a good thing, a bad thing, whatever. It doesn't matter. It's just the reality of the situation. So if there's not going to be a rate cut in September, expect a pretty darn hawkish commentary from Powell on Friday. Once again, that's at 10 o'clock. We could see that on the calendar listed here. There it is, 10 o'clock a.m. Eastern time. Powell speaks. It's, this is in Eastern time, although they'll be in Jackson Hole, Wyoming. And what else is on the calendar, right? Really, it's just the jobless claims. That's tomorrow morning. Manufacturing and services PMI. This is from the S&P Global side of the house. That is going to be the influential one, not the revised final. So watch out for that. 9:45 might be worth a little bit of patience tomorrow morning, especially noting what's going on with the technical charts. Probably worth giving it the first 15 minutes of the session. Let this come out, and then build some game plans around the levels after the volatility catalyst is out of the way. Let's move into the earnings calendar just to see what's on tap. It's Walmart before the open tomorrow, Zoom after the close, and then maybe BJ's for wholesale and just kind of what's going on with bulk purchasing for consumers. Let's get back on over and Target, just to quickly recap what went on with Target. Missing on sales. So we'll see if Walmart picks up their slack and if it's a company-specific thing or if it's a retail and consumer-driven thing. So Walmart earnings tomorrow morning will be kind of influential for that information or parsing out Target's earnings, company-specific or consumer-specific. I would think company-specific at this point. Haven't really seen major, at least, locally here and in my own life, people I know and whatnot, I haven't really seen much of like a big change from tariffs or price hikes or whatever. So it is what it is, but Walmart earnings hold the key. That is tomorrow morning before the bell. Let's get back on over to the platform. Let's take a look through the remainder of the supporting evidence chart, starting with our bonds. No inflation trigger here yet. Remember that we're watching this closely to see if it does move over the equal high. If it does, market's telling us, hey, we're actually worried about inflation. On the heels of that hot PPI report, I would expect Jerome Powell has to acknowledge that in his commentary on Friday. Let's jump into credit spreads. Small uptick continuing. So volatility increasing, obviously, on that indication, which is something to watch out for, but still generally in downtrends here relative to the April tariff volatility, of course. and also possible daily 50 SMA rejection. So I would just be watching this into the end of the week. Do we roll over for lower highs? Thursday, Friday, if we move up, I would expect these to move lower. Or even if we move sideways, the hidden under the surface sort of takeaway would just be if this rolls over as the market moves sideways, probably expecting bullish into early stages next week, right? Let's take a look at the junk bonds in isolation. There's a subtle divergence here. Let me just swap out the SPX down below. And I want to take a look at a roughly equal time scale. There we go. Notice that the S&P was much more aggressively to the downside versus junk bonds, more so sideways. So alarm bell is going off. Once again, does this align with or contradict the more bullish and rotational analysis we've conducted so far in the S&P in the face of this pullback? Right? I would think this supports it rather than contradicts it. Let's take a look over here at the total breadth, which saw an uptick today and really more importantly on Tuesday. Tuesday uptick, Wednesday uptick out of the moving average charts. Uptick on Tuesday on the new highs versus lows on the NYSE. Downtick unwinding it today. But I think the better illustration here is the RSP. Notice on Tuesday, what we care about here is the Tuesday comparison. A green day on the RSP versus a red day here in the SPX. Once, not that this has to ever be like one-to-one, but what does it tell us? Again, supporting the claim, supporting the idea of a rotational market or conflicting that with that idea, right? I would say it's supportive of the rotational market. The fact that the RSP is holding up and broadening of the market rally seems to be a real phenomenon. Let's take a look at the QQQE, which is not going to be the same, right? It also had a down day on Tuesday, which makes sense. Why does this make sense? We know that tech is weaker. So not really shocked about that. Again, you have to be if you're trading out there and you're like, I'm just going to long everything because the S&P 500 is bullish, you're not paying attention, right? Because the QQQ is not bullish in nearly the same magnitude. So trying to trade these Mag 7 stocks and all this, like the high-flying tech stuff, you probably lean into more of the short side, right? And we'll see that in the core list of companies run through in a second. Let's get into volatility before we do so. VIX collapsing here. If we just throw the VVIX on in the bottom, you can see a collapse here underneath 103 as well. That's bullish for markets, not bearish. If we come into vol futures, they did expire today, but even the new relationship is in a contango. That's up here. I hate when this happens on Thinkorswim. Oh no. Oh no, I think we broke it. Oh, we did break it. All right, that's okay. The flex grid is going to be broken, but if I go over here, let's go VIX 1D. I just want to show you the VIX 1 day as well. We're in contangos. I'll show you that on the VIX futures in a second. Little uptick here, but again, as the breakdown is taking place, is the VIX 1 day volatility breaking out and getting out of control up here? Survey says no. This is contained. This is comfortable. Does this align with or contradict, right, the higher low thesis in the S&P 500? I think it aligns with. Just to show you those VIX futures, the contango charts, let's go to product depth, and you can see here, this is all sorts of funky now that we have the rollover, but massive contango. This is contango, contango, contango. All across the curve, you're in contango. All this means is that money managers are content allocating capital in the present day versus the unknown future, right? Higher volatility is expected in the future, which is why these dots are higher. If this ever inverts, right, which is what we dealt with in tariff times, that means that there's more volatility now. Let's wait for a more certain future. Okay, that's the psychology behind it. Let's get back over to the charts. Let's take a rip through our core list of companies, and I have 6 trade ideas to share with you. Let's give this a reset here. So we're looking at a manageable time scale. All right, NVIDIA, a lot of chart work had to be done to this, cleaning up a lot of this nonsense that we had now, traded through, and you really invalidated some prior levels. So you're left with this hammer, you're left with this overhead range. On the daily chart, right, this is a primary idea, of course. Reject the overhead supply, lower high on the daily, and then you set up a downtrend, possibly retargeting the equal lows. It's possible. If you look at the hourly chart, how do we want to actually trade this tomorrow? Neutral through here, bullish over previous day's high, setting up the counter trend, this. If we get this, okay, bearish, and then actionable on the bearish side under 172.85. Okay? One more time. That's here, bullish, trading this, then lower high, seeking this. If we're here, bearish, seeking this, underneath 172.85, targeting previous day's low. Earnings next week. Keep that in mind. Okay, that is NVIDIA. Let's move along to Microsoft. Softy has had a very powerful breakdown from the weekly chart. If you take a look at these inside inverted hammers, giving it up, rotating to the downside, now you're getting into this grindy section of Microsoft where I would agree with Kramer, own it, don't trade it. Own it, don't trade it. So let's go back to a daily. Let's see what we're working with. We've come into the daily 50. This is the last major higher low as well. This is the only time frame through this entire ascent. This is the only time right here where the hourly trend flipped it down. So that major low is right below us at 502.25. If Microsoft can extend some of the loss into that level and then support any kind of hourly trend reversal, you're looking for a retracement to 518.50, then looking for that lower high to retest, right, prior lows, Brigade Bolt happening here. Okay, that sets up the counter trend move, supporting over 502.25. The counter trend is here, then seeking the lower high. Okay, to the downside, if it does continue underneath 502.25, if buyers do not step up here, then you're just going to continue to dribble down through these levels, which is fairly choppy off to our left. Oops, funky zoom. Let's try that again. Choppy levels off to the left, but the next major hourly pullback was to here, 490, excuse me. Okay, so that is Microsoft. Apple. Let's get into the daily chart. I think Apple could contend as a short setup tomorrow. I know it's got many red bars in a row. Don't focus on the number of red bars. Focus on the thin structure here. If Apple is going to be a disappointment for all these longs who tried to buy the breakout, if these buyers are going to be disappointed as well, underneath 226.75 probably gets back down towards the daily 200, daily 20, which will catch up over time. It's 220.75. If we take a look at the hourly chart, you've got nothing but thin structure here. Thin structure to retrace. Already starting to crack through it into the close. Let's see if we can get some breakdown under 226.75 through the thin structure again. 220.75 is is the target. Let's move along to Nancy. What's going on with Amazon? Gap closed today and equal low to what's going on back here, 220.50. I think that it's primarily the inverse of the gap trade, right? We closed the gap today, but now we've left thin structure there as well. So you could see if this is going to be an hourly trend reversal, over that probably is a Stevie Wonder trade tomorrow, 224.75 into 227, right? If you can get this intraday, 5-minute higher low, 2-minute higher low, something over 224.75, target 227, opening print of yesterday. Tomorrow it will be yesterday, today it's today. You get the point. So that is Amazon. I would be really compelled on the long side if we recapture 227, right? Turn this into some sort of major inverted head and shoulders. Look at your daily chart, lows, higher lows, iffy higher low, generally trying to navigate back through this. That's over 230.250 to 236.25. I mean, in here, prior to the breakdown on Tuesday, this would have been a decent watch for kind of a long up over 230.250. It never triggered, of course, but would have been a good look. Lows, higher lows, breakable flag, right? So it's not there, but that's the recapture of 227 if it happens over time. Let's jump into Google. Google hold of 198 looks great. Take a look at your daily candle structure before we talk about the hourly. Hammer candle, daily 20, looks good. Right, previous structure here, building out structure here, support the lows, rotate to the highs. Let's take a look at Google on the hourly now. If you didn't already get it long here on the hourly hammer break, daily 20 break, the whole 9 yards, then your next trade is probably either on a pullback again for a double bottom or a Brigade Bolt over the neckline to rotate back higher. If you're just consolidating here, there might be a scalp for an A to B move here, and I would possibly be watching for that tomorrow. It's not my favorite chart, but it is an interesting one for A to B as a quick in and out. Hello, goodbye, done. Let's move along to the metaverse. Daily chart here. Daily chart shows us prior all-time high was, in the gap that exists here from the earnings move, sellers were unable to accept underneath. So I would be, this one can kind of go either way because there's quite a bit of overhead supply. This breakdown is really still underneath all of this, regardless of the close in or out of the gap at 745.50. I would think that the trade idea for me is like acceptance here might be a scalp for this with respect to the range lows back here. Now you closed a massive hourly bar through that on Tuesday. It's been a little bit weakened there at 761.25. Ultimately, the target would be 769.75. However, some kind of first, trim half, hold half, trim a quarter, hold 3/4 might be a reasonable way to approach that. If you just consolidate here and remain below the daily 20, daily 20 is the orange moving average, FYI, for anybody who's like, what's this daily 20 thing? It's the moving average. If you're below prior all-time high and into the gap again, I would think that the next trade is this, right? Really accelerate through that gap range. Next up is Tesla. Tesla's a little sloppy here now. It's been a decent trade over the last little bit. We actually pulled off some shorts on Tesla today. But this range, right, is kind of still, you could call this a retest, backtest of the trend line. I don't really love trend lines, especially in that nature. More so for me, it's the failure here underneath the prior highs that really invalidate the possibility of a bull flag back for upside. Now, you still have a shot at higher lows, but the moving average clusters here. Tesla just seems very sloppy to me in this kind of section. If we go to the daily, hourly chart, excuse me, the trade has unfolded, right? This thin structure retracement already took place today. That was great, short, awesome, whatever, done. So now that that's over, the next thing just becomes like, does it retrace here and does it set up a lower high at 328? Is there another stronger short to keep all of these traders off sides who bought the daily breakout here? It's a possibility. Daily 200 reversal, right? You're still just in the midpoint, though, of this kind of nasty daily range compression. Like if I think about what the literal midpoint of that is, it's right where we've closed. So I'm not thrilled about Tesla new ideas here, considering that we've buttoned up a lot of the thin structure in this chart. I would say the next trade is like, okay, here and here, probably seeking this, right? That's your only next thin structure to the downside that exists, where what goes straight up can come straight down. That's under 317.25, 308 becomes the target. To be determined if we have to set this and then build out some sort of structure, maybe it's a bear flag over time, and then we go, right? For longs, even this becomes a little bit like, do we want to long back into this? Do we want to long back into this? There's a lot of work that needs to be done on the long side if this is going to reverse the curse, so to speak. So that's Tesla. JP Morgan, there's not much to talk about here. It's in a multi-day range, in multi-week range at this point. This over time will just be bullish for the S&P 500. If we break down, not a concern as long as we're over 280.25. Palantir, what a doozy of a stock last couple of days. So one for the books, the gap close here. Aside from that, the big flush and then 100% retracement today and some to close the gap. Now you are on a gap fill reversal basically right into the close of today's session. So I'd be mindful that you could reject here and roll over now that the structure has been repaired. The other thing to just keep in mind is that rejections of this pre-earnings high at 160.15, very, very well defined, right? So any rejections of that keep a lower high in play and probably put the pressure on back towards the lows. That's the daily look. If we look at the hourly chart, right, you've already reversed the trend via lows and then some sort of major higher low here. And maybe not a higher high yet, actually, we could say. So no higher high. But for tomorrow, I think it's quite clear that a rally here probably sets up the lower high rejection we were just talking about on the daily. If we get this, a little bit more compelling, the long is probably here, over 164.35 through the breakdown in the old gap range from the Tuesday session. If we drop 152.50, that's where this gap fill reversal is already a lower high, and then a 5 or a 2-minute lower high there under 152.50 tomorrow morning probably sets the move into 140.75, right? Back to the equal low. So that is Palantir. What else? When I have swing trades on, I like to just say what I have. So I do have a swing trade on Palantir. It's very rare that I do this. It's really just in the long-term account selling a 150 put. So I am short the 150 put, willing to take assignment. Maybe I have a bias, maybe I don't, but there's your disclaimer in terms of my analysis on Palantir. Long-term investments obviously have exposure to all this stuff. You guys know that. Anyways, Broadcom. What else? Broadcom. We have daily chart's a little sloppier than NVIDIA. I don't love it as much. The balance overhead is still technically here. Daily 20 is there. That's about $300 flat. If we get over the high, maybe that retracement takes place. I just don't like this chart as much as NVIDIA. I also don't like the way the options trade on it as much as NVIDIA. So if we are here, I would think about this and this. Probably the first thought would be consolidation between 290.25, 287.50. Brigade bolts here. If we drop this, it's probably a short back down to the low, kind of similar to Palantir maybe. And then if we get here, that's a major reevaluation for a lower high. All right. Next up, AMD. Let's go to the daily first, actually. So getting pretty sloppy here on AMD. This as a bull flag has failed completely as a breakout. If you think about this was a bull flag breakout, great continuation. This was a bull flag breakout, great continuation. This attempted the breakout, obviously here via the gap up. All of it's been given back when we've made an equal low. So you really don't have a clean daily trend here on AMD. There is no trend. It's not down, it's not up, it's neutral. So hammers off these lows would make me think like, okay, reversion to the mean is fine. If we take a look at the hourly chart, though, I think we could start to parse out a couple of special spots. Right, the lows of the daily bar are technically here at 167.15, but I think the more meaningful overhead supply probably exists at this level at 169.50. So if we get counter trend rallies, I really would not try to go long through this. I would try the long on NVIDIA if it's going to be a counter trend session tomorrow for calls or whatever. But in here on AMD, I would be more willing to take the lower high short, right? Because it doesn't have earnings. It doesn't really, it's more organic. It's losing its daily uptrend. It's not breaking out. This is a failed breakout, right? So a lower high 169.50 might become a little bit more compelling. Let's take a look at Robinhood. See what's going on with Robinhood. Another great short opportunity today. This one was almost textbook with the group, with the game plan. If you came to the pre-market prep, we talked about it as well. Under the 20 SMA, under the neckline, it had already seen expansion in terms of the volatility yesterday, but it had not actually broken range to a new swing low. So beautiful setup there. Next phase for it is probably reevaluating what happens at the origin of the breakdown, right? It's not a double top until it is. It was. And now we reevaluate at the neckline. Does 107, 106 provide a rejection, or do we get something that looks like this? I would think for now, I would really be a bit more neutral on Robinhood tomorrow, opening in the midpoint of the range, right? Great trading activity on it the last 2 days. I would sort of button up expectations on any opens in this circle here. All right, so let Robinhood maybe be a little bit, let it build out the next structure. Then when it becomes a little bit more obvious what the setup is, and not obvious in terms of what the guaranteed winner is, but rather what the obvious management of risk is against a key level based on the technical chart, that's, I think, where we strike next. So it could be this, right? That's a possibility. Could be this, right? But it needs to do something here, I would think, for the next setup to brew. That's Robinhood. Let's move into some of these setups. The first one's going to be a blast from the past. Netflix, NFLX. There we go. Netflix is, we've removed it from the core list of companies. It's become more of a swing trading stock these days at this price point, given the options chain. But take a look at the opportunity for higher lows here, curling off the daily 20. Inside hammer did not make a new low today. If you crack this high, I think you navigate back up to this equal high, which is this sort of right shoulder breakdown area on the head and shoulders, right? If that was, how you want to classify that. So all things considered, on the hourly chart, very clean double bottom, right? That's your back-to-back inside hammer here, the right portion of that double bottom. Over the neckline, 1218.50 should target 1250. Equal highs, right? Thin structure to retrace given the breakdown on Tuesday. So Netflix could get interesting here over that 1218.50. That's Netflix. Next up is going to be Cisco, CSCO. Cisco really caught my attention today with the sort of bear flag happening here underneath this overhead supply. So a little bit of a cheaper name, but underneath 67, inverted hammer still in force from the Tuesday session, right? We're technically have an inside bar today. Under these lows, call it a bear flag or whatnot, you probably rotate here. 64.07, who let that fly? That's 64.10. You guys know me, round numbers only. It's rule number 1 up here in the penthouse. Oof. 12, who let that one fly? Let's go 15. So there you go. Bear flag consolidation, failed breakout, overhead supply, looks good. That's Cisco, downside. Let's take a look at Roblox. RBLX is our ticker here. A little bit of a gap to close overhead. Let's go on down to the hourly chart and get a little bit more nuanced here. Also need to actually remove that. Do a little bit of chart maintenance. Let's dupe that and bring it up here. Ooh, 125 right on the money. Perfect. So Roblox has this multi-day range after the gap down here. It is supporting over the daily 50. Consolidation and something that looks like this is probably a scalp from A to B, right? Quick little 4-pointer out of Roblox available through that range, given that I think there's some incredible relative strength out of Roblox. I mean, considering that the broad market nearly, to be dramatic, collapsed on the Tuesday and today's Wednesday morning session, inside candles back to back, I think that's totally in play if the broad market goes counter trend to the upside. Right, so that's Roblox. Let's move along to MSTR, MicroStrategy, which is no longer micro, it's just strategy. Look at this. I think this is going to be a pattern that's in play for a while. It's the breakdown of this head and shoulders. Obviously, Bitcoin was weak towards the neckline of its double top. It hasn't broken down yet, but if strategy, caught myself, strategy is going to offer a lower high here around 359. Let's just call it 360 round number. If you're under 360, I think you clearly have Brigade Bolt lower high under the 200, rejecting this. I think people are catching on as well. I think Michael Saylor is losing a little bit of his fanfare. I think everybody's like, your leveraged Bitcoin thing, the balance sheet thing, it's not really doing it for us anymore. And obviously it's underperforming Bitcoin, just outright. I mean, different story from longs down here. You get the idea. But recently, it's been underperforming. So that is my take on MSTR shorts up against 360 if we can get there in the first place. Target would be back down here around 314.75. If we go down to the hourly chart just to illustrate this, short-term inverted head and shoulders, kind of something that does this is how we get there. But then when we get there, again, 360, 359.50, that's where I would reevaluate for that possible lower high on the major daily pattern of the neckline retest. Okay, that's MSTR. Next up, TSM. TSM, Taiwan Semi. It has a gap to close overhead. If the semiconductors go counter trend, I'm talking NVIDIA, I'm talking AMD, then NVIDIA is a top watch because of the way that its liquidity on the options chain trades. It's very, very easy to get in and out of. Excuse me. Wow. TSM has a gap, though. TSM could be interesting on the premise that also this 226.25, let's zoom way out, let's get crazy, let's go to a 5-year chart. I guess we don't need 5 years, but back here towards the early stages of the year, that was the all-time high. So this is a retest, Brigade Bolt, of the all-time high happening at 226.25. If this hammer high breaks, I would expect at least the gap to close, and then it becomes a matter of, do we get back into this range? Right? This balance range overhead could represent heavy overhead supply. I would like NVIDIA shorts. I would like AMD shorts. I would possibly entertain TSM shorts, gap fill reversal, 230, 235. Overhead supply, if it's going to offer a lower high, gauging the intraday reaction at that particular level. So TSM did catch my attention, though, with these levels, with the structure, and the prior all-time high tie-in. Okay, that's TSM. Final one, another semiconductor named ARM. Let's take a look at armament and what's going on over here. I will like ARM is in my view, it may or may not actually be. I'm not going to claim to be all read up on the ARM fundamentals right now, but it's like, I don't want to say trash semiconductor, but it's definitely not in the rankings or of the likes of NVIDIA and AMD and Taiwan Semi, which is obviously they produce those things from those companies. But ARM, it has not really ever traded in a good way, right? Obviously, it's higher off of these lows and whatnot, but it never really got in gear for this substantial thing. You can see it's just range bound over the last year to almost 2 years, right? So zooming into this, knowing that it's the weaker or more reluctant to trend semiconductor, if we want shorts on the weaker of the names, there it is, 135.50. Just like TSM gap fill reversal could be interesting, I think ARM is probably where you would hammer into the shorts and say, okay, this is the junkier, quote, of the semis. If this rally happens, I mean, it's not been performing well at all ever since its earnings gap down. It's breaking this range, daily 200s there, rally rejections of 135.50, set up shorts for lower highs there, and then, equal low target. And then looking beyond that, do we even have anything mapped under 129? We don't. It would be this low here. Let's call that 122.75. I'm going to use a round number on that. It's probably pretty spot on, though. Let me zoom back into that. Yeah, right on. Right on the money. All set. 122.75 would be the stretch target. So let it go counter trend first. Fine. Then seek the shorts if we see intraday action that suggests sellers are stepping up at 135.50. All right, that's what I've got for you in today's episode of the Midweek Market Update. A little bit of a laid-back tone, I think. A little bit more, I don't know, was it speedier or not? I guess I'll find out when I hit the stop recording in a second, see the length. Anyways, we will be live, as we always are, every morning, 8 o'clock Eastern Time, for another episode of the Pre-Market Prep. Come join us here on the channel, live, free, open to the public. All you have to do is hit the thumbs up button. It's a small little token. And that's it. So if you enjoyed the video or learned anything new, let us know down below in the comment section or by giving the video a very simple thumbs up. We'll be live again, like I said, tomorrow morning, every day, really, 8 o'clock Eastern Time. If you want to check out any of the links down below in the description, you know where to find all that stuff. With that said, big shout out to all the usual suspects. I'm sure I'll see you guys down in the comment section. And as always, I will see you in the next one.